Greetings, folks. This is DC Investing. I talk about topics to help people on the path to financial independence. Today, the topic that I wanted to discuss was Hess Midstream. The ticker for this one is HESM. I own quite a bit of this stock. It's a midstream pipeline company. Previously, it was the pipeline company for Hess Oil, and Hess Oil was purchased by Chevron over this last year. And the Hess Midstream HESM had a big drop on Friday. The stock dropped about 10%, which is quite a substantial move. But I wanted to discuss the reasons why that occurred, and then talk about potential opportunities that this may be presenting. So, what Chevron announced was that in the stuff that they bought, the company Hess was operating 4 drilling rigs in the Bakken region where they were located, and Chevron decided to idle one of those drilling rigs. So they have 3 instead of 4 now. And I believe the reason why they are doing that is because the price for oil has softened up a little bit. The consensus is we may be entering into recessionary timeframes. So they just idled one of those. They can bring it back on at any time. But what that has done is Hess had a growth trajectory. A lot of people were expecting big growth out of Hess Midstream, and now basically they're just going to be doing the previously planned throughput that they have. And so because of that announcement, the stock dropped by 10%. It's hard to say if that's really warranted or not for the drop, but nonetheless, it's what happened. So one of the things that happens when a stock drops is because the dividend payouts are fixed, it makes the yield increase. So Hess Midstream is still committed to pay the same amount of a dividend, the number of dollars or cents or whatever they pay out, but the yield increased from somewhere in the 7% range to now just over 8%. So if you purchase Hess Midstream now at this point, you get what is an effectual 8% yield on the funds that you put into the stock, which is a tremendous yield. It's really great. And so the if you talk about the risks, I'm not a genius at these things, but I try to absorb as much information as I possibly can. If you think long term, one of the conspiracy theories that some folks are kind of talking about is that if Chevron wants to buy Hess Midstream by kind of putting pressure on the stock price, it gives them the ability to purchase Hess Midstream at a lower price. And so by announcing that, hey, they're just going to do 3 drilling rigs instead of 4, the price for Hess Midstream dropped. And if Chevron then decides to buy Hess Midstream, well, they got a better price for it. And so one of the authors that I was looking at expected that they'd have to offer somewhere between the $42 to $45 price range to purchase Hess Midstream. And they basically, which would take the stock back up to about where it was. So do we know if Chevron is going to buy Hess Midstream? We don't. They could continue to do shenanigans to kind of make the share price of Hess Midstream go down. But Hess Midstream is a small company in comparison to Chevron, and Chevron did the same thing in the past where they bought Noble Energy, and then somewhere within the next year they bought the midstream company Noble Midstream. So a lot of the folks are saying that, hey, we expect that Chevron at some point in the future will buy Hess Midstream. But do we know that for sure? No, have no idea. Chevron now owns 38% of Hess Midstream because that's the amount that Hess owned from of Hess Midstream. So, at some point, maybe Chevron buys it. Don't know. Probably, but who knows for sure. So I'm just speculating. So kind of where does that leave us now? One thing to know with Hess Midstream is they have guaranteed minimum volume commitments that were locked in place via contract through Hess. So now Chevron has those locked in volume commitments. And those are good through the year 2033. Those volume commitments, whether or not Chevron uses the volume to push energy through or not, doesn't matter, because they have committed to paying those out, and the volume commitments easily cover the price of the dividends that are needed to be paid out. They kind of go up every year with inflation. And so one of the thoughts is that Hess Midstream will continue to pay out that dividend, raise it slightly each year. And also Hess Midstream has been repurchasing shares over the past while too. And so the thought is that will continue over the next while. So your dividend's fairly safe. The minimum volume commitments are signed into contract. Chevron has committed to those now. And so, you kind of put your foreseeum hat on what could happen in the future. If oil prices stay weak, most likely more companies than just Chevron may reduce some of their drilling activity. So, both Hess Midstream and any of the other energy midstream companies may have some of the volume somewhat reduced. So that's just something to kind of know about this particular sector of the market. So kind of what else? I mean, if you purchase the stock now, you get an 8% yield um, based on volume commitments. Those commitments are set in stone till 2033. It's another 8 years from now. So, the Fed just started its rate cutting environment. If you need income, purchasing something like Hess Midstream gives you a much higher yield that you can get from a money market account. The thought is that yield is pretty safe. At some point, a lot of the folks think Chevron is going to buy Hess Midstream. Do we know that for sure? No. But these are some things as an investor you kind of have to think about. When the stock dropped, I ended up purchasing quite a bit more. I invested another somewhere between $10,000 to $20,000 in the stock, just based on I want the dividend. Do I know that that's going to stay steady or go up? I don't, but I just wanted to present to you this opportunity. The price dropped quite a bit. It made the yield go up. The company isn't going anywhere. They're definitely going to continue to move oil around in the Bakken. Chevron now owns the land and the drilling rigs and the energy infrastructure, and Hess Midstream is what pushes energy around through the pipeline. So it's still a really interesting play. The country needs energy. If you believe in the AI mantra or theory right now, they're going to need a lot more energy than they have now. Natural gas is the prime energy contender to supply electricity for data centers, and Hess Midstream does push natural gas. I mean, all of these wells, they first pull oil out and then they get more gassy over time. So that natural gas needs to get moved off to someplace, most likely making electricity for a data center or turned into NGLs for shipment, liquid natural gas overseas. So just kind of the thoughts today on Hess Midstream. It had a big drop on Friday. It may present a new opportunity to purchase this in hopes that you'll get a great dividend, and at some future point, Chevron may buy it and give you a 20% upside or something on a one-time thing. So those are some thoughts. Do I know that for sure? No, I have no idea. But I'm just trying to present some opportunities and thoughts that may help the investment community. So what do you guys think? Do you think there's risk in Hess Midstream? Think it's an opportunity? Anybody have anything to add? And comment below, and thanks for your time. Bye.